This is our Forex blog post for September 16th, 2011. If you hear a weird noise in the background, I have built a treadmill desk in the last 2 weeks, and when I'm at work I stand up and walk a mile an hour, so if you hear a weird sound, that's what it is. Our currency meter shows you, and this is the basis of how most of us trade, it shows each currency, and you basically want to buy the ones that are strong on as many time frames as possible against the ones that are weak. You can see the euro today was one of the weakest. The intermediate time frame is underneath that. The daily trend was up until that point and then later shifted down. The weekly trend is just mildly up and the monthly trend's down. The Swiss is weak on all time frames but didn't have the same kind of intensity that the euro had. And normally we trade the dollar or the yen against the weakest ones, but this was weak and so was the yen coming into today. But when you start to see some strength here at 2, you really could trade the strong dollar against the weak euro from that point until the weakness comes back at 5. The New Zealand was one of the consistently strongest today on all time frames, especially at 330 right here, where it had its strongest strength. But let's look at the euro dollar first. Weak euro, strong dollar. This thing's going to go down, and you can see that it did. It fell from about 60 all the way to the lower containment band down here at 90. It's a 70 pip drop. One of the tools that most of us use are something called range bars. Instead of 5-minute bars or 2-minute bars or 3-minute bars or even tick charts, range bars show X number of pips per bar. So let me bring up the euro dollar I left running overnight. And we will go over this one during that period. Let's scroll back to that time frame, and this is using the build your own statistical trend tools. This allows you to create something very similar to our IntelliTrend Fast and FX Trend Pro. It allows you to combine all of our amazing statistical tools into one composite reading, weighting different time frames and different tools. All the top tools measure direction and the bottom 2 measure the intensity of the direction. I like to give intensity tools at least 40 to 50% overall weight, and so that if the vast majority of euro dollar pairs are going down and they're going down with incredible intensity, I'll know. So as you look at this, the trend was down, then it went up, and clearly here you can see this, the momentum on the downside was the weakest of all. It goes up with decent momentum, falls with okay momentum to the downside, and then as it's going sideways right here, the upwards momentum's all but gone. So it was pretty much, basically as you're analyzing the swings, you want to trade in the direction of the main momentum. Down, then up, and then a little bit less strength here. You might have, looked for buys on this next pullback, and unfortunately that strength didn't continue, and the last momentum to the downside was more than the momentum to the upside, and you get into that trade. The beautiful thing about range charts is you could buy this, sell this breakdown right here, sell this 20-minute breakdown right here. You have a beautiful 30 pip pullback trade right here where you can risk less than 10 pips, comes back down, double bottoms, has less weakness than before. If you stayed into that trade, you can clearly see the weakness subsides even more. Or if you're still staying in that trade with your stop above the high, expecting a bigger move, when it went up and came back down with even equal momentum, it's pretty much had every opportunity to go lower. It's not going to. So that's how you can use the range bars. This is a 6 pips per bar chart. Obviously the dollar wasn't the consistently strongest one today. That would be the New Zealand. And so let's bring up a New Zealand dollar, Euro New Zealand chart. Most of us don't trade this that often, but this was the highest odds trade today. Especially when the euro was weak from 230 to about 6. And notice, there's just astronomical move down. The euro was, consistently weak. And even if you started looking at this at 4, which is right here, it still fell another 150 pips. And if you brought this up and put on like a 6 pips per bar chart or something, this would give you many other opportunities to catch this extreme downtrend. Hopefully my e-signal loads the data. Sometimes when I run 2 versions of the software and leave it running, it doesn't get the data, but in this case it did, so that's good. 6 pips per bar is probably a little bit too little, so because this is a higher volatility, I'll use a 9 pips per bar chart. And you can see that, you know, if you miss the first move down, you have a nice little rectangle pattern right here. You have the Fibonacci profit target of the first wave as a very good likely profit for the next one. And this is so weak, you're selling one of the weakest currencies, or the weakest currency today, on the most time frames is down, versus one that was the most consistently strong. So, you know, it's more likely to go past the first fib target to the second one. If you shorted this at 6,700, you have a real chance of making 65 pips on this, and you're risking, you know, you put your stop a few pips above the little swing high right here, you're risking, you know, 20 pips to make 65. And that's really the key to trading. Small losses, bigger wins. There's nothing complicated about it. Another one that was consistently weak today was the Swiss. Unfortunately, the dollar did not maintain its strength all day, and after 5, it was you know, more likely to go down than up. But you know, from 2 o'clock right here, it showed some strength. The monthly and weekly trend are up. So, you know, looking to buy the dollar Swiss makes sense, at least until about 5. And you can see this one's above the hourly, and you can see, you know, it came down, found support at the hourly, went up. You might have made a little bit. This breakout right here went from 20 all the way up to 60. It was a 40 pip move. And looking at it on a pips per bar chart, 6 pips per bar is a little bit too much for this one. You really should have a 5 pips per bar. But you can clearly see as this thing exploded up right before midnight, the momentum was to the upside. As it's chopping in, it's above the hourly, and you got a nice little beautiful wedge pattern right here that you don't really see as clearly on the 5-minute chart, if you notice. 5-minute chart's a lot more noisy. The patterns just don't make sense like they do on a range bar chart most of the time. The momentum was to the upside. We had a little bit of intensity on the way down, went up and down and up and down, and you can see the last momentum move up had twice as much strength as the weakness right here. And so when it broke out, you get in and you have your Fibonacci profit target already in mind. This is a trade that has a very high odds of giving you more pips than you're risking. You might have got out of this trade right here at 46. You're in it at 20. You made 26 pips while risking, you know, 6 to 10. And so anytime you take a trade, and in this trade I would classify as probably 60% likely to work. It did work. Not all of the high odds trades work. But when they do work and you make 2 times or 3 times, or in this case 2.5 times what your risk is, you don't have to be right even half the time to make money. I mean, so number one, find the currencies most likely to trend. Use, you know, our wonderful tools to see the momentum in those currencies, and then take the trades. Now, the Swiss also was consistently weak all day on all time frames, just like the euro. So you could have also bought the New Zealand Swiss. Strong New Zealand, weak Swiss. And if you look at this chart, you'll see, hopefully I'm getting, let me put it to a 5-minute chart here. You can see that this one trended up 110 pips. And, you know, the Swiss and the New Zealand, maybe the New Zealand didn't have that much intensity until a little bit around 3. You can see around 3:30 right here, it was extremely strong. Even if you missed that first move, which went up about 30 pips, you have this beautiful little flag pattern right here, and you have a beautiful pullback pattern right here. And even if you missed the first move, the second move, and you only took the third move, you have the Fibonacci profit target of the first wave. And let's say you got out right here at this level right here, 77. You're in this trade around 12. You know, you made 65 pips while risking 10. And so really that's the key to trading. It's not, you know, there's no advanced math involved in the, you know, method that you should focus on. Focus on trades that are the most likely to give you 20 to 50 pip wins. Sometimes you're going to get them and sometimes you won't. Some of the swings are 5 to 10 pips where you get stopped out with a 5 pip loss. So you got to get in on the second one. You never know if the second one's going to be another loss, a break even, or that 50 pip win that you want. You just have no way of knowing. Our software doesn't tell you what's going to happen in the future, but it does very accurately measure on a bar by bar basis in real time what all the time frame trends are. And the Forex market tends to trend. And that's why most people trade the Forex market, because trends, probably as much, if not more, than most other markets tend to continue. So when you find the strongest of all the currencies, it's likely to remain strong. Unless what time news comes out most of the time. Every once in a while there's a surprise announcement, like the other day this week, but most of the time that doesn't happen. So we'll do one more example here. Well, we see that the Australian was weak all day and the New Zealand was strong. So obviously you would want to sell the weak Australian versus a strong New Zealand. Most of the time these remain strong or weak together. You can see this one is very choppy and it doesn't really look that nice on a 5-minute bar. Let's put this on a 5 pips per bar chart and you'll see how much clearer the charts are. You'll have less wicks. And let me see here. Maybe that's too few. Let's do 6 pips per bar. There we go. It's a little better. So you can see, during this choppy phase, it actually doesn't look that much better. If you want to have something equivalent to maybe a 15-minute bar, 9 pips per bar, we'll give that to you. You have this breakdown right here. And if you miss the first trade, wait for a pullback or a little sideways rectangle pattern. You go short. Like I said before, the first trade doesn't always give you the 30 to 50 pip win you want. But guess what? You get a pullback, a nice little sideways rectangle pattern, which is one of our patterns. You know where the Fibonacci profit target is before you even pull the trigger, and you can do the risk-reward ratio in your head. This is 46. Let's say you get out at 50. If you short this thing a pip underneath that sideways range right here at 83, you're gonna, if the trade works, you're gonna make 30 pips or more. If the trade doesn't work, you put your stop a pip or two above here, and in this case, you might risk 17 pips. So my personal goal is to make at least 1.5 times more when the trade works than when it doesn't. And if I do take, I prefer 6 to 10 pip stops. So if this is 17 pips, I'm going to cut my trading size in half. And I'm also going to, once it moves 5 to 10 pips my way, I'm going to move the stop down in half. So, if I have a 17 pip stop and it moves 10 pips my way, I'll move the stop down 7 pips. And now I'm only risking 10 pips because that's what I like my maximum loss to be. And that's another trick that you can do to minimize your losses. And you can see this one kind of went down and went sideways. You don't know if it's going to continue. Move your stop down. At least you lock in 6 to 12 pips right there. And then it goes down and it stalls down at the fib target and you're out at 50. You made 30 something pips. First trade, you might have made 5 or 6 pips. Or if your stop was right above the high, it never came back up and stopped you out. And if you had the patience to hold, I personally prefer to get in. If the trade can't break the swing low here, get out with 4 pips, get short an hour later, and hopefully, like is in this case. And if it goes sideways right here, a lot of times I get out of half my trade if I feel like it's not going to continue, because I would rather make 10 on half and 30 on the other half. My average profit would be 20. But, how many times have you traded where you have a nice 10 or 15 pip profit and then it reverses and you have nothing? So that's my own personal, I find it easier psychologically to trade and to trade more lots that way.